Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street, starting from the benchmark index moves to sectoral action and all the stocks that are buzzing the most in trade. We'll update you with all of that. We'll also get you expert views to find out where exactly are opportunities emerging for equity investors at large. But first up, a quick check as to how the markets are doing as we begin the last half an hour of trade. Well, the Nifty and the Sensex have picked up a slight more pace, 18,757 currently for the Nifty. It's up by 40 odd points, about 2.2% higher in trade. Look at the Sensex as well. There's a 100-point jump now, 63,243 as the current levels, 0.1% higher in trade. On the other hand, if you see the mid-cap and the small-cap 100 indices, both of them had been doing better than the large caps at this point. But right now, if you see the small-cap 50 index is something that has slipped by 0.4%. Let's look at the mid-cap and the small-cap 100 indices. Both of them, how are they panning out in trade right now? We did see the momentum building up in the first half of the trade. The mid-cap 100 index is continuing that momentum and trading near the day's high point right now, with about 0.2% of a surge, although the small cap 100 index has actually cooled off from the day's high point. It's just about 0.1% higher in trade. Now, amid the other sectors, if you talk about the Nifty sectors as well, barring the gains which are being seen on the FMCG pack, that's up by 0.7% or so, and some of the other stocks like the metal pack, which has been shining the brightest in trade today, 1.4% uptick for this one. We're also seeing slight gains coming in on the auto pack, and the realty stocks have pulled up from the day's low. The consumer durables are doing better. Oil and gas stocks also inching higher by 1% right now. So let's look at that, because that's inched up on the back of cooling off of the crude oil prices at large. What still remains sulking in the sulking zone for the markets is the Nifty Bank, that's down by 0.1%. The IT stocks that were hovering about half odd percent lower in the first half of the trading session has actually come off the day's low again. It's now just about 0.2% down in trade. We're also seeing the pharma stocks slightly sluggish and the private banks also down in trade. But amid the top gainers and the losers, you will spot a whole host of names from the consumption basket, the metal basket and the power space. From the gainers pack, Tata Steel, JSW Steel, all of them up in trade, 2.5%. Tata Consumer Products, 5% up in trade. So that's the stock that you should keep on your radar. Grasim, Power Grid. So the infrastructure story looks positive as we speak. On the downside, however, you do have the financial names, the bank names, IndusInd Bank, Axis Bank, Bajaj Finance down in trade. Losses coming in on Hero MotoCorp as well now, and Bharti Airtel seeing some profits being taken off the table too. But time to welcome our guest on the show. Rajesh Kumar Jain joins in. He's the Associate Director at Anand Rathi Group. Welcome, Mr. Jain, and thank you so much for taking the time out for this discussion. Well, first up, your own thoughts of how the market setup looks to you. Of course, everybody is awaiting the US Fed decision that comes tonight. We saw the US markets partying yesterday already with a one-year high coming in on those indices. But again, a cautious trade coming in on the Indian markets today ahead of that meeting. But help us understand, how do you view what could be the decision that the US Fed may take after the CPI inflation for them fell almost to a two-year low at 4% odd. And going forward from here, if you could explain to our viewers, how will any decision taken by the US Fed impact the Indian markets at large?
Hi, Sakshi, and thank you for having me here. Now, as you have questioned me how the Fed hike would impact the Indian stock market, let us understand the Fed decision in three ways. If you see the US inflation rate, it has gone from a northward high of 9.1 and has cooled up to 4%. Now the world is looking at Fed to understand the commentary and what would be the rate hike decision. Now this has to be understood in three ways and has to be analyzed in three different ways. First, if Fed hike increases the interest rates without any comment of a rate cut, then I think market will not take it lightly and there can be some sell-off in the market. The second scenario is if Fed hikes the rate, but at the same time talks about or gives a dovish comment that there can be no further hikes and there is a possibility, or if the comment is that there can be a possibility of a rate cut might be at the end of the calendar year or maybe the first quarter of the next calendar year, then the market will take it positively, and maybe Indian markets can remain the same or maybe at the sideways. And the third scenario is if the Fed pauses the interest rate and at the same time gives a dovish comment that they may look for a rate cut maybe at the end of the calendar year. I think market will take up that very positively and there can be upside in the Indian market. So this has to be analyzed in three different ways how a Fed talks about.
Okay, but for the Indian markets, we've been seeing a number of factors at play here. We've seen the FII flows improving for us. We've seen the macroeconomic data supporting the sentiments as well. Sectoral rotation really looking, taking the leadership in the markets. All of these things have, in fact, led the markets to take this, plunge towards the all-time high levels as well. We are seeing that we are just about 150 points away from the all-time high levels as far as the Nifty is concerned. Your own thoughts, is it just a matter of time before we see the benchmark index really reach that all-time high level? And then what goes beyond that?
Sakshi, see, if you see, let us understand what has happened in this financial year and what are the factors which has contributed to this flare up in the markets.
Sure.
If we see the markets, in this financial year, the small cap index has given a return of somewhere 20%. The
Correct.
same way, if you see the mid cap index has given a return of somewhere at 17%. And if you see Nifty, the Nifty has given a return of somewhere at 9.76, which is mostly dominated by the large caps. What has really flared up this thing is the fourth quarter GDP numbers, which has come beyond expectation at
Yeah.
7.2%.
Yeah.
RBI pausing the interest rates. Indian inflation coming at 4.25% versus the earlier trajectory of RBI at 6%. And crude settling at somewhere between $72 to $77. Anyways, India is getting cheap, discounted crude oil from Russia. So that is favoring Indian economy as well as the forex of India. So these were few of the factors which has really flared up the market to from a 16,800 odd levels in March to a 18,700 levels, which we are currently seeing. Now, the two most important thing which we have to look at currently is what is the valuation at which the Indian markets are trading in and the geopolitics, which is one of the very caveat before anything. Now, if you talk about the valuation perspective, MSCI India is trading at currently at 115% premium to the MSCI emerging markets. Now, such a type of scenario we have seen in September 2021, where the Indian market was trading at 18,800, which was the highs of that. And the Indian MSCI India was trading at a 120% premium to emerging markets. And we have seen a fall in the market from 18,800 to somewhere at 16,800 or 900 levels. We are witnessing the same level currently where Indian MSCI India is trading at 115% premium to emerging markets. If the other side is, if you see the Nifty earnings for financial year 23, we have ended up at a Nifty EPS of 820. With the current market trading at 800, 18,600, 700, we are trading at a trailing price to earning multiple of 22 times.
Correct.
Now, if you see the long-term mean average of Indian markets over the last 10 years, the price earning multiple was somewhere at 18.6 to 19.1. So we can say that we are slightly on a richer side of the market.
Okay.
But for the most of the analysts has come with a projection that for this financial year, that
Yeah.
is financial 24, we are talking about a EPS, Nifty EPS of 970 to 980. Now, if a 970 EPS with a 21 PE multiple,
Yeah.
we are talking about a plain mathematics that market will be and somewhere at ending up at this calendar year or maybe the next quarter of the next year at somewhere at 20,000 odd levels. So on a longer
90,000.
term, yeah. So on a
Okay.
longer term, we are very bullish on the Indian markets. Indian market look poised to do very well. It looks very promising. But might be on a shorter term, we might see some sort of profit booking because market has given a fabulous return over the last 2 months. So there can be a possibility of some profit booking. But yeah, on a longer term, we are looking that market will be really bullish and sectors will do quite well. Maybe FMCG, real estate, banking, auto will help us participating in this rally.
Okay, understood that. But will it be long before the markets really peak out? You did say that 19,000 by this financial year end or maybe the first quarter of the next year.
No, I'm talking
Yeah.
about, we are talking about 20,000 odd levels by this calendar year.
20,000 levels, you said.
Yeah, 20,000 odd level by the calendar year.
Okay, understood that. Understood that. You know, the FII flows have also resumed, Mr. Jain. And do you see the stability from the FII front for the Indian markets going forward from here? You know, even as you do say that, you know, the valuations are still on the richer side, will the FII flow continue?
See, if you see in the previous financial year, the FI or maybe FIs have sold to a tune of somewhere at 2,50,000, 2,75,000 crores. Okay. Now, sorry, 2,75,000 lakh crore. Now, if you see April, March until now, FIs have just plumbed in only 32,000 crores into the Indian markets. And so only just 10-15% of the money what they have sold off in the previous financial year has only come in. So I think maybe on a longer term, I think still a lot of investments from the FPIs are going to come into the Indian markets. And I think there where the rally will move further from here. And but it will be more on sectorial bets rather than on the overall market. So might be auto, banking, real estate ancillaries, or NBFCs can do still better. But there can be a possibility that a lot of money will not flow into metals or maybe pharma space.
Okay, okay, understood that as well. You know, the mid and the small caps, how are you looking at these two spaces? Is there enough to legroom to really start, you know, buying if you've still not bought into these spaces despite the fact that they're at record levels?
See, what we personally believe that there is a lot of scope in the mid cap and the small cap space, but somebody has to be really very cherry picking in these spaces of the market, because what is happening if you see in the mid cap and small cap spaces is many of the companies, if you see on the real estate ancillaries, maybe the pipe companies or the adhesive companies, if you see these, when the raw material prices were moving up, these companies have passed on a sizable amount of the raw material price hike to the end consumer. And currently, what we are witnessing is the inflation is cooling up, which is ultimately the raw material prices of most of the end products have also cooled off. Prices remain the same. If you see, a lot of these companies are going through a gross margin expansion. So one has to be very tricky and very cautious while choosing the mid cap space. But I think there are a lot of scope in the mid cap and small cap areas where a lot of cherry picking will keep happening from these levels.
Okay, understood that. Any particular themes that you believe investors should be bullish on, keeping in mind for the rest of the financial year 2024?
See, two of the sectors or themes I am really bullish on is I am very bullish on the real estate side. And more, my whole hypothesis why real estate as a whole is because we are seeing that we are witnessing that there is a huge migration of people from the rural to the urban areas
Okay.
due to a good job opportunity or maybe for a better standard of living. Second, we are looking that Indian, Indian people are moving from a traditional way of living to a more nuclear family or state of living. And third is the India rising per capita income, where we are currently at $2,300, and we are talking about $4,000 maybe 3 years, 5 years down the line, while the economy will also move from a $3.5 trillion economy to a $5 trillion economy. Once these three states looks at that, there will be more demand for affordable housing, or there will be more demand for housing as a whole. But if you see the real estate companies, every time there is an apprehension on the corporate governance level, there is an apprehension that most of the real estate companies are highly leveraged, or there is always the balance sheet are not clean enough. So the best way to participate in this real estate sector is to buy real estate ancillary companies. So companies on the paint side, on the adhesive side, or maybe on the pipe side. If you see the companies in the real estate ancillary side, on the pipe, paint, and adhesive side, most of the companies, the balance sheets are very clean. The corporate governance levels are on a higher standard. And most of the companies in this space has almost negligible debt or debt-free companies. If you see these companies, the raw material prices also cooling off, as I told you before, and the gross
Right.
margin expansion has happened for in most of these companies anywhere between 100 bips to 400 bips. So I personally believe companies in this sector will bound to do well. Second thing,
Okay.
second sector where we feel we are a bit bullish is the FMCG sector. if you see the FMCG sector over the last financial year, most of the growth in the FMCG companies has come from the urban economy of the side, and the rural economy hasn't participated, or the rural people hasn't participated into enough buying. Now, what has happened is inflation going up, and the wages hasn't gone up in that way. So one way the cost of goods have gone up, and the wages hasn't got hiked in the same fashion. With We are coming to an election year, and government thrust is very high towards rural spending. They have increased the MSP prices of the kharif crops. We are looking that there will be a normal monsoon going forward. And being the election year and the government spending in the rural areas, I think there will be a lot of money in the hands of people, and that's where the spend will come. And so, looking at good monsoon, rural spending going to go up, and the government thrust towards rural in the election year, I feel this is one of the sector which has to be looked on from these levels.
Okay.
And
Okay,
again,
understood. Yeah.
yeah, sorry. And again, the same thing is in this sector also, when now the commodity prices have started cooling off, there will be again a gross margin expansion in most of these companies. Hence, there will be an upside in the EPS.
Fair point. Noted that. Well, thank you so much, Mr. Jain, for being with us on the show and discussing all these insights with all our viewers about markets and where exactly to find opportunities in the current setup as well. Let's look at the markets again. 68 points of a jump for the Sensex right now, 63,212 as the current level. On the Nifty, again, the Nifty is hovering around 18,753 odd levels. So we are still holding up, although on the higher end of the narrow band that the markets have been trading at through the trading session today. All eyes on the US Fed, and perhaps we are going to see, a positive close, but not very handsome gains coming through. All eyes are definitely waiting for the US Fed decision, and perhaps after that, in case we do see a favorable commentary coming in, apart from the decision that the US Fed takes, the markets could then take off from there on as well. We'll continue to watch the market momentum for you, and you can track the same by being with us on Business Today TV. So don't forget to subscribe to this channel, and also continue to engage with us on our other social media platforms, that's Facebook, Twitter, LinkedIn and Instagram. Until then, many thanks for tuning in.
Small investors keep their focus on blue chips and the movement of the index. Veterans say the broader markets are giving better returns. India Today Group's global business editor Udayan Mukherjee spoke with Anand